I've made a lot of huge strides in my trading over the last 4 years, but the time I spent hovering around break even was a huge hump for me to get over. So in this video, I want to cover 3 things that helped push me into profitability. And before I start, I need to mention that I still struggle with a couple of these at times. One trading session where I lose discipline, get greedy, and trade poorly can really wreck my momentum. So I'm not claiming to be perfect, but I believe if you really work on these 3 things, you'll see a massive improvement in your trading, as I have with mine. And if you want to watch me trade on a regular basis, I am live on this channel Monday through Friday for the first 2 hours or so of the market open. Let's get into it. I'll start off with maybe the most important piece of advice I can give you, and that is to size down, or at least adjust your position size based on the parameters of your trade. Now, I want to mention this was drilled into my head by someone I consider a mentor of mine, Dylan O'Neill. He is a prop trader on Wall Street and is an incredibly disciplined trader. But the idea is very simple. First, make sure you know how much you want to risk on your trade. Let's say you are willing to risk $200 per trade. Okay, now before entering a trade, identify where you would need to place your stop loss. Let's take NASDAQ futures, for example. 1 point on the E-mini NQ contract is worth $20. Let's size down by switching to the micro contracts, which are 1/10 the size. So now 1 point is just $2. If our stop loss is 20 points away, we would want to enter the trade with 5 micro NASDAQ contracts. If our stop loss is 14 points away, we would enter with 7 micro NASDAQ contracts. If our stop loss is 10 points away, we would enter with 10 micro NASDAQ contracts or 1 E-mini contract. By doing this, you've standardized your risk across your trades. This keeps your stop loss from being too tight. This keeps you from over leveraging and making emotional decisions based off of your P&L and not on the chart in front of you. You may be thinking, micros suck, they cost too much in commissions, you can't make big money with them. Well, you're wrong. Commissions do suck, but I believe it's worth it to get this concept down. As far as making money, you can make great money with micros. A few months ago, I was trading E-mini on one account, and I was trading the micros on another account. I made $1,500 trading micros, and I lost $500 trading minis. If I'm confident in a setup, if I know I want to be positioned short, for instance, but realize I may be a little early in the entry, I can take the trade with a few micros, give the trade a generous stop loss, and target the bottom of a range, and let the trade play out stress-free. I can leave the trade running in the background while I go about my day and not feel the need to constantly check it and micromanage it. Pun intended. So if you find that your red days are equal to and sometimes larger than your green days, please consider sizing down to micros and adjusting your position size based off of where you should be stopping out of a trade. Okay, this next tip is definitely straight out of the book, Best Loser Wins by Tom Hogard, which you should absolutely read if you haven't yet. But basically, what I believe makes trading so hard is because our brains are overly concerned with protecting us from pain and discomfort. And trading can be uncomfortable. When you're in drawdown in a trade, close to getting stopped, when you do get stopped and the pain of a loss is realized, and when you're in profit, you're scared of pullbacks that could easily erase that unrealized profit. All these cause discomfort. But have you ever been in a trade that almost stopped you out, where you spent the entire trade in drawdown, only for it to finally turn around and move back towards your entry and closer to being in the green? And you thought, if this trade comes back to my entry, I'll just take this off for break even. Why would you do that? Well, obviously, you've just been sitting in this discomfort, desperate for it to go away, regretting getting in the trade, but now the market is likely confirming your original thesis, now moving in your direction. So why would you take the trade off? The only reason is to escape the discomfort. But your stop loss held, and now things look like they can go your way. Stay in the trade. Unless, of course, the market has provided you with more information that negates your thesis and you do, in fact, want to scratch the trade, that's fine. But recognize when you're doing something based off the desire to remove discomfort as opposed to making a decision based off of new information. Now, on the other side of the trade, when you're in profit, not yet at your target, you may be getting nervous every time the market has a normal pullback, and you see the potential profit start to evaporate. You decide to cut the trade early. Green is green. Well, let me read a direct quote from Best Loser Wins by Tom Hogard. One of the popular cliches in the trading world is that you can't go broke taking a profit. Oh, hell yes, you can. If you are unable to let your profits run, you will never make money trading. The amount of times I've gotten scared of my unrealized profit disappearing, cut the trade early on a regular pullback, only for it to hit my target a few minutes later, is outrageous. It happens all the time. So I've been making a point to try and stick out the discomfort, focus on the chart rather than my P&L, and trust my levels. Here's the trade I took where I did just that. Low trend, jump out, the downside is greater than the upside. You know, let's say it was the opposite. Let's say my stop loss was here and my take profit's down here. I would still hold this trade probably, until it hits my stop. So why would I not hold it until it hits my take profit? Target acquired. The best advice I can give is to try and level out your emotions in a trade, whether positive or negative. If the trade works out, fine. If the trade doesn't work out, fine. After you exit, it's back to the charts looking for the next setup, regardless of the last trade's outcome. Hide your P&L if that will help. Trust your analysis. I'm often asked in my live stream if I have a daily bias. I generally don't. There are scenarios that I think are more likely to happen based on current market conditions, but since I am just scalping, I am usually open to playing both sides of the market on any given day. The times I've lost the most money are the times I've ignored what the market was telling me and kept trying to trade one side that just wasn't working. I would think, well, this indicator is turning bearish, price just double topped, we are due for a reversal. Let me sell the highs by getting in short. We chop around at the highs, get a small movement down, and I think, I knew it. Here it comes. I'm gonna add to this position, so I'll make a killing when it proves me correct. Well, wouldn't you know it, but price sweeps higher, stops me out for a loss, double my initial risk, and now I'm pretty pissed. So I didn't wait for confirmation for price action to get short. I was trying to be an early seller. I added to the position with the smallest movement lower out of greed. There are times you get rewarded for being over leveraged, and there are times you get whooped for being over leveraged. When you take a beating, that could easily send you into tilt. Then maybe you try and short again. You were just early, you were stop hunted, the move lower has to happen. Maybe you even try shorting again with that double size. And bam, you were stopped out again, and watch as the market rips higher. By marrying your bias, you set yourself up to be potentially over leveraged, take oversized losses, go on tilt, and miss the real move the market is making. You cannot ignore what the market is telling you. It doesn't matter if you have an oversold RSI with a Bollinger Band compression at the top of a Keltner channel with a MACD crossover. If the market is pushing price contrary to your thesis, you have to be willing to adapt. Here's an example from my live stream. I'm looking for shorts. I'm gonna try a short. Took a stop out. I take the loss. I was sized appropriately for the account, so not a big deal. Let's say the down move is over for now and longs are the play. Well, if I wanna flip my bias and trade the other side, then I would want to see us come back probably to the 20s. So after taking the losing trade to the short side, I planned what I want to see in order to take the trade to the upside. I see what I want, I take it. And while I did exit a little early, I'm working on that, I was able to enter long again and catch another nice trade. After the move to the upside stalls out, I then get back in short, riding the market lower for a really nice trade. A lot more trades than I usually take, but I think this price action gave you trades in both directions. So it was fun. I think it was a really fun session, even though a couple of trades didn't work. That's how it is. You know, you're gonna take some L's, but shake it off. Like, look for the next play. And if your bias is wrong, flip. You know, I flipped long and scalp long again. And then I'm like, all right, maybe now let's get the short side again. So I was playing, you know, both sides all day. So that trading day was a really good example of having a fluid approach to scalping the markets and adapting to what the market was saying to take the session from a $260 red day into a $500 green day. Market is ripping without me right now. Let's do a quick recap. First, adjust your position size so that you have standardized risk across each trade. I encourage you to trade micros if you are a futures trader. Second, recognize fear when you are trading, but don't let it dictate your actions. Get comfortable being uncomfortable and trust your analysis. Third, don't marry your bias. Listen to what the market is telling you and adapt. I truly think if you combine these three concepts with screen time in front of the charts, you will see huge improvement in your trading. Thanks so much for watching. See you in the next one.